Going on, guys? Welcome back to my channel. Today I got another one for you where we're going to cover a particular city, state, region, and I'm going to pick out a listing that's on the market right now that you can buy, and I'm going to show you how you could do it with the minimal down payment. By the way, this recommendation came with one of my subscribers, viewers, so if you live in a certain city that you want someone to cover, please leave a comment below. Leave a comment below what you like about this video, what you don't like about this video. I would love to hear from you, and if any other place that you want me to look into deeper and show you how numbers could work, please don't hesitate to drop a comment below. Thanks. All right, so today we're gonna cover the city of Chicago, and honestly, I was very surprised because in Chicago, the average home you could buy is almost $80,000 lower than the average price in America. So in Chicago, $340,000 is the average home, which is up almost 5% from the same period last year. In the United States, the average home is $421,000, which is up almost 3% than the same time last year. Now, homes here are selling almost 2 months on the market, which is really rare. Like, I'm in California right now, it's almost unheard of. But in Chicago, a home is gonna stay on the market for almost 2 months, 56 days to be exact. And the average home is selling for 1% below the list price. Redfin rates this market as 44 out of 100. Gotta be honest with you, this is some of the lower ratings that I've seen on my channel or just in general research that I've been doing for people. However, this also means that there might be opportunity in this market if this is the one that you're eyeing. Regarding online searches, so 17% of all online searches coming from the city are people that want to move out, versus 83% searches for people that want to move in, get more information about this place. By the way, this particular city that we're going over is Oak Park, which is a suburb of Chicago. Denver happens to be one of the biggest online searches for people that want to move into the city, followed by just other small towns and big towns inside of the state of Illinois. Regarding schools, I have to say I'm very surprised because I grew up in California, most of my business is California. I have never really seen school ratings in the ones, but in Chicago, you will see school ratings in the ones. However, when you go outside of the suburbs a little bit, like say Oak Park, the one that we're doing in this video, you could find something in the mid-level, like 5, 6, 7s. So it's a good sign, it is out there, and the prices in Chicago suburbs are very affordable compared to other parts of the country. Natural hazards, so I gotta say it's all pretty low. I mean, you know, Chicago is known for colder weather, so obviously there's no fire hazards. Flooding is also very low. Heat is very low, wind is pretty low. So yeah, as far as a natural hazard probability, Chicago and the suburbs is all very low on the scale. Now let's take a look. I have for you guys a particular listing that I want to go over. All right, take a look. So yeah, single family house, very like East Coast vibe. Looks like they put in some money. The floors are refinished. The painting is done. The trims, it looks kind of original. The cabinets look like they've been done. Let me take a look when this house is built. This house is built 1926. Yeah, so for sure it's not original. It's been renovated, and maybe even more than once. Oh, this is kind of cool. You don't really see this in California, but this appears to me like a basement or a bottom unit that has been used as like a living room. So that's kind of cool. Yeah, so I mean that's pretty much the house. 3-bedroom, 1.5 bathrooms. The square footage is not shown, so more than likely in the public records it's not available. So that's the reason why you see something like that. Now let's take a look at programs. So it's listed for $440. Remember initially I said that in this area homes are selling for 1% less. So that's $4,400 that we have in our pocket. We could either offer a lower price or we could save it to cover some of our closing costs. For this example, I'm just gonna give you the numbers for $440 as it's listed, and then show you how this 1% credit could be used to lower your cash to close. Now, $440, 5% down payment, one of my most popular favorite programs for a first-time buyer, which is equal to $22,000. Now the loan is going to be $480. The monthly mortgage payment is going to be $28.51. $150 insurance against the fire. Property taxes in Illinois is a little bit higher than California, so in this example it's going to be $550 per month. And PMI, which is private mortgage insurance, which you're going to have when you have down payment less than 20%, and that's equal to $132. All in all, your monthly payment excluding utilities is going to be $3,683. Now to qualify for this mortgage, you need $90,000 of gross. This doesn't have to be one person, it could be 2, 3, 4. The idea is you just need $90,000 of gross yearly income to qualify. Now I've took it a step further. I've been doing this a lot. I've been doing mortgages for 9 years, going on 10. So I know how it works. One of the biggest benefit of home ownership is tax write-offs. And if you plan to occupy this house and you plan to live there, so a big portion of this $3,683 you'll be able to deduct. I've already done the math for you because I've do this so many different times. Obviously consult your CPA if you want more exact numbers, but roughly I could tell you that about $600-700 every month you'll be able to put back in your pocket because you have this house, because you have this payment, and because you occupy it. So that means your monthly payment after tax savings is going to be about $3,000. Now cash to close, $22,000 down payment, $12,000 closing costs, $4,400 seller credit that we're going to use. Remember, we didn't decide to offer a lower price. We're just going to use this money to cover your closing costs. Result, for $29,600 you could close this deal, and you only need to have income of $90,000 per year. Now the most interesting part is it's not like in California where, you know, if you get a mortgage now, it's going to be really hard to move out and cover it on rent, especially if you're doing a low down payment. However, in this city, for some reason, again, correct me if I'm wrong, maybe you know something else about the city, maybe you know the sources that I'm using, redfin.com, maybe it's not showing the full picture on the rental income. However, when I tried to search the same neighborhood, I did a small radius to see what's actively listed for rent, and I was able to see most numbers above 3,000, which was kind of strange for me because you could buy this house for $29,600 and then your payment is going to be $3,000, or you could go rent something and your payment is going to be $3,000, but that $3,000 is just going to air. You don't get to write it off, you don't get to do anything, there's no appreciation. So it's really rare case where it's 1-to-1. We're very close to it. So guys, if you're in the Chicago area and you have the minimum down payment to buy your own house and you have the income to qualify for it, I think it's a no-brainer in most markets, especially this one. If you like this video, please put a thumbs up, subscribe to the channel, leave your comments, tell me what you liked about this video, what you didn't like about this video. And again, if you have any other cities that you want me to touch on in future videos, please don't hesitate to drop a line below. And thanks you guys so much for watching. I'll see you on the next video.